So recall the W-4, and I called the W-2 the W-4 earlier. They're obviously very, very similar names, easy to confuse the two. The W-4 form is a form that the employee fills out at the beginning of their employment, and they may fill out during their employment if something on that W-4 form has changed, if they need to update it for some reason or another. Now this is, when you guys took payroll, you know that this form has changed over the last few years. The old form was not quite as, it wasn't as involved as this form is now, but it was also because of the big changes that happened with the 2017 tax legislation, that withholding certificate, they call it a withholding certificate, that W-4, the old one, really didn't correspond very well with the amount of withholding that should be taking place anymore. It was not an accurate form to be using to withhold the correct amount of income taxes for employees. So they devised this new W-4 form. It is a bit lengthier. It can be quite involved, but the purpose behind it is to arrive at a much more accurate amount of federal withholding that should be withheld. So first part there, name, address, all of that. So that's the employee's name and address. And then we've got here, box C is filing status. We didn't have filing status before in the old form. It was just single or married, right? It didn't correspond with filing status. Now, our withholding corresponds with what our filing status is. Now, this is one of the reasons why we may have to fill out a new W-4 during the year. If an employee gets married or gets divorced, their filing status changes. Remember, filing status is determined as of the last day of the year, which means that if they start the year single and then they get married during the year, well, ultimately they're going to be filing as married filing jointly or married filing separately, but they're not going to be filing as single. So if they're going to be married filing jointly, when they get married, they're going to want to change that withholding. Now, they can't do it before that because this does have to be accurate. It has to be an accurate representation of their status, but they would want to make sure that withholding, that filing status is accurate. Step 2 is filled out only if you have more than one job or you and your spouse both work. Okay, so this is for multiple jobs. And again, the calculations that are behind this are devised to try and get a more accurate calculation of how much should be withheld. There are 3 different options here for those filling this out. There's an estimator. I tell you what, I don't know if you've ever gone, maybe if I had you in class, I probably went through and showed you this estimator. This is essentially just like doing your taxes. I mean, the questions that are asked are the same questions that would be asked on a tax return. So it's rather involved, but it gives you the most accurate amount of withholding. So you can go to the estimator, figure out what your withholding should be, and then what you do down at the bottom is you just enter in the amount that it says. Now, the problem with that is if your salary or your wages are not the same every pay period, then that estimator, the amount that excuse me, the amount that it spits out is just a flat amount for every pay period. So that may cause some issues. Second choice, there is a multiple jobs worksheet on the back of this form that can be filled out. Third choice, this is the easy one, this is the checkbox. And I say the checkbox because we're going to be talking about the checkbox in a few minutes here. So this checkbox, if it's checked, means that there are 2 jobs, but they're both essentially the same amount. So if you and your spouse are both working, one of you makes $60,000, the other makes $63,000, that's roughly the same. You can just check this box. You don't have to do any other calculations, right? That checkbox comes into play when we do the calculations for withholding. so you kind of remember that. Step 3 has to do with the child tax credit and the credit for other dependents. If you are going to be eligible to claim either one of those credits, then you would fill out this step. Now, you don't have to fill it out. If you don't fill it out, your withholding is going to go up. But you can't fill it out if you're not entitled to fill it out. So you can't say, oh yeah, I've got 3 dependents when you don't have 3 dependents. But you can say, you can fill it out that, okay, I have 3 dependents, but I'm not going to indicate that I've got 3 dependents. Because like I said, what that does is it increases the amount that's going to be withheld. The IRS has no problem with you increasing the amount that's going to be withheld. They do have a problem with you decreasing it if you're not entitled to. So, number of qualified children under age 17, multiply that by $2,000. Now you can see this form does not take into account that additional child tax credit that we talked about last chapter, right? Remember, that was only temporary. There was really, if that had been extended, chances are there would have been a space on the W-4 to answer questions about that. But it wasn't extended, so we're only concerned about with that original tax credit. So multiply the number of qualified children under age 17. Remember, it would be 18 in 2021, but oh well. By 2,000. That's the credit, right? Multiply the number of other dependents by 500. That's the credit for other dependents. So what this does is it includes in its calculation of withholding that assumption that you're going to be entitled to those credits. Which means if you are entitled to those credits and you put it down there, it's going to reduce the amount that is being withheld from an employee's paycheck. Step 4 are for other adjustments. So if you have other income that are not from jobs, other types of income where you wouldn't be filling out a W-4 form. Remember, if you've got 2 jobs, you're going to fill one of these out for each of those jobs. If you have other types of income where there is no withholding, but you want to be able to pay, you're going to owe taxes on the money, and you want to be able to pay those taxes through your employment withholding, you can include that income here. This part, any other income, is going to increase the amount of withholding that you have. So, like rental income, interest income, dividend income, any other type of income that you might have, you can include in this calculation, or include on this form amounts that would then be considered in the calculation. Deductions. So if you expect to claim deductions other than the standard deduction, now worked into the calculations already is the standard deduction. But if you think you're going to be itemizing your deductions, there is a separate deductions worksheet, and then you can enter the amount after you've finished the worksheet here. And then at the bottom is any extra withholding. So you go through, do the calculations, and you realize, you know what, that's not going to be enough. I want a cushion. I want some sort of cushion. I want to have extra withheld. You can just put in a flat amount. Then once the calculation is done, payroll will then add that amount to the ultimate calculation. Okay? Questions about the form? You remember the pre-2019 form, it was like 1/3 of a page long. There were worksheets to it, but it wasn't as involved. So these are the worksheets that are referenced up here. So like this one, multiple jobs worksheet, you would fill this out here, and then this number would be entered on, in step 4C. Deductions worksheet here as well, so if you're going to be claiming itemized deductions. All right. So this is the information that we need in order to calculate income tax withholding. And what this does, there are 4 pieces of information. If you remember, I'm not sure if I presented it this way, but there are 4 factors that we need to know. All 4 of these pieces of information are required in order to calculate withholding. The first one is we need to know what our taxable pay is. They call it adjusted wages. But essentially, it's the amount that's going to be taxed. So this would also not include any pre-tax amounts. So if you have benefits that are taken out of your pay and they're not going to be subject to taxation, it would not include those amounts. It would include any amounts that are of wages that you are receiving that are not in the form of cash. So for example, you have a company car and there's personal use of your company car. That is a taxable benefit, the personal use of the company car. So the value of that would be added then to that taxable pay. Adjusted, there's a worksheet. This is the final number off of that worksheet, and we'll take a look at that. So this is the first factor that we need to know, is what our taxable wages are. Second factor, frequency of pay. How often are we paid? You recall, I mean, there are more different frequencies in this, but these are the main ones: weekly, bi-weekly, semi-monthly, and monthly. Oops, do that again. And monthly. These are our four main ones. So we need to know how frequently we are paid. Third thing we need to know is filing status. Remember that checkbox right up at the top? We need to know how that was filled out. And then, I can't remember which box it was. Was it box, what's the checkbox? Is that box 2C? Maybe I should put the book up there. Okay, in step 2, yeah. Step 2C checkbox. We need to know whether that was checked or not. Yes or no? Those are the four factors that we need to know in order to calculate withholding. Now, we get this from the W-4, we get this from the W-4, we get this from one of the worksheets that is filled out with the W-4, and it's not, that worksheet's not filled out by employees, okay? We'll look at that worksheet, and then we just know this one, right? We know how often they're gonna be paid. All right? Those are the four factors that we need to have in order to determine federal income tax withholding. There are, let me just pull up this Pub 15-15T. Make sure it's the 2021 one. So if you're going to use one of these publications, make sure you've got the right one. And it says for use in 2021 for your problems. Okay, don't use 2022. You can see we've got several different tables and methods listed here. The ones that we're going to work with in this chapter: automated payroll systems, this first one on page 5, wage bracket for 2020 or later, percentage method for 2020 or later. These other ones, this one's for 2019 or earlier, wage bracket method, percentage method for 2019 or earlier. We're not, they're in there, they're still in the publication, but we're not working with them in this chapter. All right, so let's look at one of these worksheets here that I talked about. That it's filled out. Well, it's actually built into any payroll software, but these are the calculations that are behind it. This is the first part of this. Well, actually, calculate withholding. You can use this method, but I'm going to show you as well how to do this without using this form. First part here is just determining what that adjusted wage amount is. So in order to arrive at the first factor, it asks you for, so employees' taxable wages in this payroll period, and then how many payroll periods are there in a year to get the annual wages. Okay, and then all the calculations that, now this 8,600, there's a box here. I know this is hard to see. Maybe I'll pull it up on here. This is a little easier. If the box in step 2 of form W4 is checked, this is the check box, enter 0. If it is not checked, enter 12,900 if the taxpayer is married filing jointly, or $8,600 otherwise. Okay, so this is the checkbox question, that fourth factor up there. So we've got our, and this again, this is just to arrive at what our adjusted wage amount is. And here it's an adjusted annual wage amount. All right, so we want to put that in. So let's just, can I play with this? No, I can't play with it. Never mind, it's not fillable. Adjusted annual wage amount. And then, if they are using the old method, which in our case we're not, they would fill out these, you would fill out these lines here. Step 2, figure the tentative withholding amount. So we're going to enter in the amount from here onto step 2A. And then we're using these tables. You guys remember these tables? Look familiar? Okay. So let's play with one of these tables here, just to kind of refresh your memory. So remember, we've got 4 different factors that we need to know. The adjusted wage amount is going to be calculated on that other form, and once we have that, and it's on an annual basis, this is for the automated system. Okay, there's other system that we're going to use. It's similar to this, but just slightly different. So once we have that, the taxable wages, so let's just say we've got, we did that calculation, and our taxable wages are $60,000. Frequency of pay, we'll say it's weekly. Filing status, married filing jointly. And checkbox is, well, is yes. All right. So we can use this table to figure out, and it continues on with the different filing statuses. So we have to find the right table to use. First thing is we've got to look at our filing status. Okay, what's our filing status? Okay, so we're married filing jointly. We've got 2 tables here to choose from. Married filing jointly, married filing jointly. And which table we use is dependent upon how we answered this question here. So yes, and you can, I gotta scroll down because you can't see it. The top. Standard withholding rate schedules is on the left. Checkbox withholding is on the right. So if that box was checked, we're going to use this table here on the right. If it wasn't checked, we're going to use the table on the left. Okay, so it was checked, so we're going to use the table on the right. Now, what we do, and this is very similar to how we calculated marginal tax rates, right? So we've got the correct table, and that's one thing, a lot of students make the mistake of using the wrong table. So if you've got a mistake, I would suggest you, first thing you do is go back and look to see if you chose the right table. It's an easy mistake to make. So $60,000
is between 53,075 and 98,925. So, our tentative amount to withhold is 4664. Remember, this is on an annual basis. Plus 22% of the amount that exceeds 53,075. Notice that's the lowest number in the in the range. Okay, so we've got, first thing we're going to do, 60,000 minus 53,075. So get your calculators out because I'm going to need your help here. So what do we have? 925, what is this, 6925? This is the amount that exceeds 53,075. So we're going to multiply this by whatever percentage it told us to, 22%. How much is that?
1523.50.
All right, 1523.50, but we're not done yet. We have to add this amount as well, the 4664 plus 4664. So 57,816. $6,187.50 for the year. The total for the year that should be withheld. So the worksheet then tells us to divide it by the number of pays. Sorry, can you see that?
Yeah.
I'm sorry, I'm so short. Figure the final amount, and then, so this is our tentative. If you go through all of these steps, you will arrive at the same number. So you can use this form as a guide. If you forget how to do it using that other table. And that's the percentage method. So if we went through all of this, the tentative amount, withholding amount would be the 6187.50. That's how much that would end up in line 2H. Now, if we have any tax credits, so this is the 6187.50 is, we're assuming that's how much the individual with a married filing jointly status that has the checkbox checked and is making $60,000 a year, that's how much tax they're gonna owe. But that's before any credits, right? If they've got 2 kids, then they would be entitled to $4,000 credit, right? So enter for tax credits. If the employee's W-4, enter the amount from step 3 of that form. Step 3, whoops. Where's it? Oh, the W-4 is not here. I gotta go back to the W-4. Step 3 here, this amount that we had calculated, based on child tax credit and credit for other dependents. So that's gonna be listed here. So if we had one box checked, now here's the thing, if you've got a spouse, which I assume they do, they check yes, they probably have, their spouse also is, makes about 60,000, both spouses don't wanna claim those kids. Cause you're gonna be over withheld if you do. Cause remember, it's only one, that credit's gonna apply to both of your incomes. And your tax liability combined, so only one spouse wants to put that down. So let's just say, in our case, box 3, they had $2,000. So now, this up here, so that Sam can see it, 4187.50. Okay. So that's for the full year. Now you can guess what we're going to do next. To figure out how much to withhold for this pay period, we're going to divide it by the frequency of pay, right? So weekly pay period, so how many pays is that in a year? 52. Divided by 52 equals what?
So 4187.50 divided by 52.
$80.53.
80.53. That's how much is going to be withheld federal income taxes per week for this employee. Lots of steps here. Those are the four. If you've got those four pieces of information, and you've got the W-4, you've got to have the W-4 as well, because you've got to know if they have claimed any additional deductions or credits, right? That's what you need in order to calculate that withholding. So, using this table, if you recall, we've got two different methods of calculating withholding. So we've got the two methods. First one, percentage method. Which is this method here. It says right at the top. Using these tables. We also have the wage bracket method. Remember, the wage bracket method is using all of the same information. We still need the same four factors, but it's on, we can look it up on a table. We can look at how much the wage was and what the filing status is and arrive at the number. But that table doesn't go on forever, right? It stops at a certain wage amount. So when that's the case, then you have to use the percentage method. You can use the percentage method for any amount of income. Doesn't matter what the income is. You can only use the wage bracket method if the income is within the table's limits. Questions so far? Is it ringing a bell? Is it coming back? Yes? No? Alright. So the wage bracket method, we still have this form to fill out, but it's a little shorter. It gives you the same, a lot of them are the same calculations. You still have to arrive at the adjusted wage amount. You still got a spot for credits. The tentative withholding amount though, all you're gonna do, once you've got the adjusted wage amount, you're gonna look up the amount of withholding from the table. So let's see, so here's what the tables are. So in our case, so we've got and this is on a per payroll basis. That first method, we're looking at an annual basis, how much the withholding is, and then we're dividing it by the number of pays. Here, we're just starting out with the number of pays, although they do enter, let's see, yeah, well, this is kind of funny. So they start out with the taxable wages this pay period, and then they ask how many pay periods there are, and then you end up dividing it by the number of pay periods. So you're kind of going forwards and then backwards with this amount. So let's look at 60,000 divided by 52 pays. So in this case, our taxable wages, our adjusted wage is $1153.85 per pay. $1153.85. So this one's weekly. Oh, we want weekly. 1153.85 is at least 1140, but less than 1160. They are married filing jointly, and the checkbox is checked. So $72. So
can see this is a little bit different. It should be roughly the same. Sorry. Did I do that? 60,000. Yeah, that's all right. 1153.85. Oh.
I think you were looking at the bi-weekly chart.
Oh, was I?
Yeah.
Oh. Okay, so here's weekly. You're right. 1153, did I say?
Mm-hmm.
So this is, our tentative amount to withhold is 118. That makes more sense. Remember, we haven't subtracted yet the tax credit. We subtracted the tax credit from that one. We haven't subtracted the tax credit from this one yet. So that 118 would then be entered on the form right here. So 118. Then enter the amount from step 3, that was $2,000, divided by the number of pays. Divided by 52, 38.46. So now we're gonna take our tentative amount up here, 118, minus 38.46. 79.54. What did we come up with in the other one? Close to that, wasn't it? 80. I can't even remember. And then if they had any additional amount to withhold, we would add that on. Percentage method, this is going through the same thing that we just went through. And then this is so this is automated payroll systems and this is manual payroll systems. Essentially, the automated is when you've got an annual salary percentage for purposes of your problems, of your homework problems. But I think the problems will tell you which one to use. Percentage method, you're gonna use the method we just did, but you're starting out with the per pay amount. Whereas up here, you're starting out, well, you do have a per pay amount, but you're trying to arrive at the annual amount. And the percentage method is using the tables that we already looked at. But what you'll do is you'll look at, I think it's best to use this publication, just make sure you got the 2021. I might have this in Blackboard. So percentage method tables for manual payroll system form W4 from 2020 or later. And right here in that publication, which is the same as percentage method tables for manual payroll systems with forms W4 from 2020 or later. So they just pulled that out though. So a couple of things to remember. So the wage bracket method is the table. You still have to figure out on a per pay basis how much they're making, but you can use that then to apply to the table itself. Remember that the percentage method, you're gonna use these tables and you've gotta do that calculation. Wage bracket method, you can just apply the tentative, the adjusted wages to the table to determine what the withholding is. Let's see. Oh, I'm getting mixed up here between whether I'm in the book or in the publication. These are so hard to read. It's too blurry. Questions on that? No? Let me make sure
search up, what I searched up is 2021 wage bracket method tables, and it shows the 2021.
So 2021,
On Google,
oh, and then it pulled up the,
yeah, I pulled up the last 2021 wage bracket method tables. Cause mine, when I search it up, it pulls up the PDF very first one.
huh,
Oh, cause you're on Microsoft Bing.
here we go.
Yeah.
Isn't that funny how you get different results? Alright. Here we go. Probably move this, because I'm gonna put a different folder in here for the current videos, but there it is. Okay, next. So that's the federal withholding, and thank goodness we don't have to go through the old method as well. Just remember these 4 things and our 2 methods. Alright, so Social Security and Medicare taxes as well have to be withheld, right? So remember, we've got a wage base for Social Security. We've got employer and employee, employer, employee portion. We've got Social Security, Medicare, and we also have additional Medicare for income over 200,000. Okay. So tax rate for Social Security, 6.2%. Employee pays 6.2% for a total of 12.4%. Medicare, 1.45%. 1.45% for a total of 2.9%. Additional Medicare, employer doesn't pay any of that. It's only the employee, and it's only on amounts over 200,000. 0.9%. These two together are 15.3%. Probably familiar to you as the self-employment tax rate. Because a self-employed individual pays both halves, right? So these amounts also have to be withheld from employee paychecks. So if we've got a paycheck, let's say, and it doesn't matter what the pay frequency is. Now, that doesn't matter here. What we're concerned about is when we get to that wage base. And this is 2021. For Social Security, only Social Security, 142,800. Medicare does not have a wage base. Income from the first dollar to infinity is subject to Medicare tax. Earned income from the first dollar to infinity is subject to Medicare tax. So, for example, if we have a wage of, say, $5,025. These are the wages that are subject to Social Security and Medicare tax. So pretty easy. Social Security, we're gonna take 6.2%. Medicare, we're gonna take 1.45%. For the employee's portion, the employer is going to pay an equal amount, right? So you can do the math if you want, but these amounts would be subtracted. You can do it if you want to do math, go for it. Okay, that 142.8
it's on a per taxpayer basis. So all income, all earned income during the year, and again, earned income is income that is subject to Social Security and Medicare tax. So it would include wages, bonuses, commissions, wages from one job, wages from 12 jobs, all of them together, right? It would include, if you are active in a partnership, that partnership income would be included, because that income from partnerships is subject to self-employment tax. It's considered, it's like the self-employed income, Schedule C kind of income. Also, income from self-employment would be included in that 142.8 maximum. Now, what happens is sometimes you'll have an employee they got 2 jobs during the year. Maybe job 1, they made $100,000, and then they switched jobs. Job 2, they made another $100,000. So $200,000 in total. Well, they made $200,000. Their wage base is 142.8. Great. Each employer, though, doesn't know how much in total they made. So the individual employer is going to withhold on the wages they pay until they get to 142.8. Which means this employee will be over withheld for Social Security taxes. That gets entered on the tax return and is refunded if they don't have any additional liability, as though it was income taxes. So that's where it gets reconciled, is on the tax return. So to illustrate, so this employer, 7.65%, this is 7.65%. That's where that comes from. 7.65%. So 7650, 7650. We have 003. So 15,300 was withheld. Well, guess what? For Social Security, I don't pay attention. I just want the Social Security. 6.2%. Sorry, if you wrote that down, erase it. 6,200. 6,200. So 12,400 has been withheld for Social Security. Well, guess what? 142.8 times 6.2% is the maximum that was supposed to be withheld, right? This is what they owe. So what's 142.8 times 6.2%?
$88.53.60.
This is what they owe for Social Security tax, but this is what they paid through both of those jobs. So the remainder, the excess that was paid is gonna get refunded on the tax return. There's a spot on the tax return on page 2 for excess Social Security withheld. It's along with that railroad tax thing on there. Okay? Questions? Let's see. All right, so real quick, let's see. Tips are included in taxable wages. If an employee makes more than $30, they say 20 here, I think it's 30. We'll call it 20. If they make more than $20 in a month, then they are required to report those tips to their employer. So, what is this, November, or October, we'll take October, because today's the 10th, actually, good example. During the month of October, if you made $500 in tips, you have to report that to your employer by the 10th of the following month. What the employer is gonna do then is use that in the calculation of how much Social Security and Medicare tax to withhold, how much federal income tax to withhold from the amount that they owe you. So you're having withholding on those tips. It's just that it's happening in arrears. right? And you've already received the $500. So if you're, the employer is, say they owe you $300 in wages, and they have to figure the total amount of taxes based on the $800. 300 from them, 500 from tips. But they're gonna subtract the tip, or the taxes that they withhold only from the $300, because that's what they owe you. You already got the 500. Okay? There are other ways that, so that's one way the employers can have you report it, the actual amount of tips. There's also this allocation method that employers can use, and this is for employers, I think with 10 or more employees. They call them large employers. I don't think 10 is real large, but they can allocate the tips and assume that you received 8% of whatever your sales were in tips. So they can use the gross receipts per employee, so figure out for each employee what their gross receipts were and multiply that by 8%. They can use a method using the hours worked per employee to allocate them. Or you could come up with some other agreement between the employee and the employer to figure out what that allocation should be. Now, in the case of allocated tips, there's no tax withholding on those. That doesn't mean that you don't have to pay tax. Still subject to tax, and the employee needs to report that as taxable income on their tax return and pay the tax at that point. But it's not going to be withheld. Okay, and if you recall, there's a box on the W-2 where that's entered in.